Hello, everybody. It is your real estate agent here in Phoenix, Alex Fajardo, and I am kicking something off new this year. And what it is I want to start doing a monthly video where I can share with you guys some tips, some tricks, things around the valley, homeowner strategies. For those of you that maybe consider selling in the future, uh, some strategies in that regard. And one of the things I want to share with you, because I think accountability is completely important, is that I have a goal of helping 20 families in 2025. And for those of you that have already started that journey with me and I got to help here in January, thank you so very much. What we're going to cover in this video are a few things that I think, because of it being February, that it is important for us to make sure that you're in the know of it, that could help you. And first and foremost, let's go ahead and kick this off with some tax and financial benefits. So, one of the things, if any of you watching this video just bought a home in 2024, if you do not have it saved in your closet in the folder that the title company gave you, reach out to your real estate agent, whether that was me or someone else, and get your final closing statement from them so that you can give that to your tax accountant. On that settlement statement, there are things that they may be able to deduct to help lower how much you're charged in taxes or how much money you get back. And that can include mortgage interest, points that you may have paid to lower your interest rate, and closing costs. So that's number one. Get that estimated settlement statement from your agent and or closing title company or escrow company. Okay. Number two, one thing, if you have been in your home and when you originally bought the house, maybe you got a conventional mortgage and you didn't put 20% down, you put less than that. Chances are, not 100% of the time, but chances are you will be paying for PMI, private mortgage insurance. So you will want to reach out to your current lender, the individual that is servicing your mortgage, and say, hey, I think it might be time for me to check. It's been a couple of years or a few years, and I'd like to get a new appraisal or CMA to verify my home value so that I can potentially remove the PMI on there. If you don't recall this, the PMI, if that was put on there, I kind of joke with my clients that PMI is basically insurance that you pay to protect the lender because they were willing to finance you at less than a 20% down payment. So keep that in mind, that it's always good that if you've been in your home, especially for a while, and you know that you put less than 20% down, go and have that conversation. I do want to share that there are, FHA is an example of a mortgage. If you got an FHA loan, PMI cannot just be removed because you have reached past a certain threshold. That does stay on for the life of the mortgage, or if you choose to refinance. So just keep that in mind. So next topic I want to talk to you guys about is home value and equity protection. Okay. One thing that is always important to do is to stay in the know about every aspect of your life in general, right? And that starts with knowing your home's value. So one thing that I offer at no charge to anybody, if you watch this video and you're like, yes, please reach out to me and we can get you what's called a CMA, and that's at no cost. Home values change all the time, especially as somebody who at my brokerages, I help with doing the market update. We can see that one part of the valley can have more fluctuation on home prices than another part of the valley. So it's important to know your current home value because it can help you with this next recommendation, which is reassessing your homeowner's insurance. Many policies base coverage on an outdated tax assessed value. That is, the value that your home is determined at the county instead of your actual market value. Why is that a problem? Because it can lead to underinsuring your home. So it's important to review your policy and make sure it reflects your actual current replacement costs. And one thing that can help with that is that CMA from us, where we will go and run comparables to your home and give you an estimated value on your home. The other benefit to knowing your value of your home is that it will help you with two other things, which is one, refinancing decisions. If rates were to drop in 2025, it'll be beneficial knowing your home's value so that when you go to talk to a bank or a lender, and if you need a recommendation, we can help you with that. It'll be beneficial to determine what loan to value you will end up be needing to refinance, whether that's for cash out purposes or a straight refinance, just rate refinance. The other reason, and we're going to talk about this in a little bit, is also to potentially prepare for future selling strategies if you're thinking about selling down the road. Okay. Now, moving on, maintenance and energy efficiency. One thing that I think many homeowners are guilty of, I say this from going out and meeting with homeowners to sell their property, taking buyers to go look at homes, uh, keeping up with maintenance. One of the terms that comes up a lot, it's kind of the reverse of this, is that it seems as if there was a lot of deferred maintenance in this home, right? If you are owning a home, it is your job to keep up with that thing. And not just because you might be thinking about selling it in the future, but very specifically because it could actually be saving you money. So, really important if you'd like to save some get some energy savings for summer, right? Then here's some things you should do before summer. Number one, go get an HVAC tune up. Okay. Program those thermostats, right? I know here at our house, we have a thermostat at 3 different points in the house. Great. I think we have one AC unit, 3 zones. So it's important for us to make sure that maybe the AC unit is maybe running a little bit higher before when we're not at the house. Then it can drop down when it knows we're on our way home based on our schedule. So program those thermostats. And if you've been in your home for a while, the home's maybe 10, 15, 20 years old, have someone or yourself get up in the attic and check on insulation and see if there is a good amount and evenly spread all around your attic. Okay. So another thing that you may want to take a look into, I am always going to be someone that tells people to be very careful when signing up for solar. We're in the best state for it, literally because of the sun. It's been a very controversial topic in my real estate career. So if you do choose to go that path, please, please, please do your homework, number one. And then number two, take a look at the state and or federal solar tax credits that are available if you choose to do that, right? So those can be very, very beneficial. And from what I've been told, don't quote me on this, but I believe there's some incentives that are soon to expire. So if you've been on the fence about going and getting that, just know from an incentive standpoint, from tax credits, you may want to pick up the pace on that. Okay. So, all right. Let's move on to the next one here, and home ownership protection and growth. Okay. So, one big area that kind of catches me off guard, right? When we look at what's happening as an economy, our savings accounts have dwindled dramatically compared to like during the COVID years. I think I saw a stat that said that in 2021, at the peak of COVID, that we as a country had saved over $2.3 trillion in our savings accounts. And that number is now actually in the negatives. Why do I bring that up? Well, if you've ever been in this position, and truthfully over 2 decades, I have been, and I've learned my lessons, is when something breaks in your house, especially one of those bigger system components, AC unit, water heater, you name it, man, not having the coin to have to go and take care of that can be extremely stressful. So what is the solution to that? Review your home warranty if you have one, or consider going and getting one. You can sign up for a home warranty, and most home warranty companies just will not allow for any claims for 30 days to prevent those that are like, something broke, I'm going to go get a home warranty, right? So go get a home warranty. Much like other insurances, home warranty, what it does is it will protect you in the event of a system component breaking down. Make sure you read through what each home warranty covers, right? Like if you go to one company, it may be different than another company, but an overarching theme on all of them, they take care of water heaters, they take care of AC units, whether that's repairing or replacing. And so one of the things that helps a ton is you may be spending anywhere from $500 to $700 up front, to pay for the year. And then you'll have a deductible that you'd pay in the event of one of those things going out, right? And so, but that deductible could potentially save you hundreds, if not thousands of dollars, depending on the item. And if we're just speaking frankly here, like I think spending $500 to potentially protect yourself, from a system component going out and having to pay a small deductible like $70 or $100, much better than stressing, because a lot of the homes that I have helped sell recently, AC units have come up, roofs have come up, water heaters have come up, right? And home warranties did not exist on those. We're spending $7,000 to $10,000 on AC units, right? Now, most home warranties do not cover roof coverage, like replacement of the whole roof, but they may have like spot treatment. If you have like a small area with a leak, they may cover something like that. Okay. So one of the other things that I think we probably don't get educated enough, when it comes to protecting yourself as a homeowner, is building an emergency fund. It is highly recommended, unfortunately just not talked about enough, but it is highly recommended that you set aside at least 1% to 3% of your home's value for unexpected repairs. Okay. Right. We're talking $500,000 home. You should have $5,000 to $15,000 that you set aside in the event that something happens to your house. I'm going to use this moment to let you know, if you run into that, you need an AC replacement, you need roof. Over the time that I've been in the business, and it's crazy here in February, 13 years as a real estate agent, 16, 17 years in the industry. Luckily, I've met a lot of people, built a lot of relationships. So if you run into that and you're looking for a way to minimize the cost on some of these bigger repairs, you can reach out to me and I'd be happy to get you connected with some of my people. Okay. So now, last but not least, future selling strategies. Now, even if you're not thinking about selling for 1 to 2 years, now is the time to start making small upgrades that increase the value without overspending. Okay. Let me basically share. It is so much easier to digest writing a check for say $11,000 or $12,000 to prepare a home if you got to do that over a couple of years. So number one, start taking a look at a couple of things. I'm going to highly recommend that there's always two big things that you should consider doing to your home, assuming that you've lived in it for more than a year or two. Okay. That is to paint the interior of the home and to replace carpet. Those two items do wonders when it comes to buyers out there looking at homes. That smell of fresh paint, the feel of that new carpet, not seeing stains or concerns, of saying, if they got little ones, hey, is this carpet gross, right? Like carpet and paint, walls and floors are just the first thing that stick out to people. And so just want to make sure that we're on the same page here, that the closer to when you plan on selling your home, painting is a great idea. And at the same time, you may want to benefit from it. And maybe you do it like 3 to 6 months before you're planning on selling. Okay. Same thing. If you need some help, if you need some recommendations when it comes to painting or flooring, and stuff like that, happy to get you connected as well. And so another thing to keep in mind are appliances, right? Appliances are a big thing that buyers look at. The exterior paint on a home, potentially like re-rocking areas if you have rock in your landscaping. And another one that becomes really difficult for people is decluttering and organizing, right? When you're living in the home and start, I'm going to keep that, I'm going to save those clothes. The more you can start getting rid of stuff now, so spring cleaning is a real thing. Take advantage of that. And last but not least, keep a digital home binder or a real binder of things that you spend money on, right? Receipts. Somebody, I remember I met with someone and they're like, we just did the roof like 5 years ago. I'm like, perfect. Can I have that receipt? And they're like, no idea where it is, right? So make sure you have like a well-maintained home with records. Buyers love seeing that. It shows a pride of ownership and helps them really fall in love with the home even that much more. So, all right, guys, we're going to wrap this up here at the 15-minute mark and say thank you to you guys for checking this out. Again, my goal is to do this every month for you guys and provide some strategies like that. And if you have any questions, feel free to let me know. Either ask them in the comments below or feel free to reply to the email where you got this video from, and I'll be happy to get right back to you, including if you are looking for that CMA so you can know your current home value. All right. As always, very appreciative of you guys. If there's anything that I can do for you real estate wise or for a friend or family member, I appreciate your referrals. And I hope that you guys have an awesome month here in February. Take care.